Alright, but today is the 17th of May, being a Sunday, and this video is simply just going to be going over the trade I took on the 15th of May, which was a Friday. So we're just going to take a look at the analysis behind it. It's going to be a lot more different compared to my other analysis videos. I think that this will be a whole lot more effective in relation to the trade analysis videos. I get straight to the point, not a lot of yapping. We're not reviewing the entire day, in which led me to be rather convinced to executing. But yeah, jumping straight into the execution. I didn't actually have this recorded. Now, I normally like to have an execution video, going at the start, but I didn't record the entire trade from start to finish. I started recording it somewhere here. I thought I was recording, turns out I wasn't. And even so, my phone died before this even would have hit take profit. So quite literally doesn't matter, but this is execution purposes anyway. Entry was at 39825 and target was 232.50. So 232.50, 39825, and our stop loss was at 406.75. Now 19.5 risk to reward, basically 20 RR. I've stated multiple times in a lot of my analysis videos, I don't pay attention to risk to reward. I don't subscribe to risk to reward in terms of, oh, there's a fixed risk to reward that I'm going to look to, get. I align myself with these markets from an algorithmic standpoint, meaning that if I find myself at a point of inception, my risk is going to be wherever inception is invalidated, and my reward is going to be wherever I deem terminus. And this can ultimately be 3R, 4R, 5R, 6. It really doesn't matter. Of course, I did say I don't subscribe to risk to reward, but it doesn't mean I don't respect risk to reward. Of course, I'm not going to be looking to, have negative RR, one-to-ones. There's nothing wrong with a one-to-one. I just don't abide by it. I don't see it as worth it. 1 to 2, I also don't see it as worth it. So I like to generally say a minimum of 1 to 3 risk to reward is when I say, okay, it's worth me risking my capital. So with this trade, this was an inception continuation model. So this is during the New York PM session. We were framing a 1400 power of 3. It was also during the power hour. So we're looking to utilize the power hour last hour trading of the day for that sell side expansion. PD array utilized was an M15 SIBI, M5 propulsion block. We had an M1 standard deviation projecting for buy side so that we can locate our point of inception to continue that sell side delivery motion. And then entry mechanics, 15-second inversion for a value gap, 5-second change in stay in delivery. And then we had a low risk sell, M1 standard deviation projecting for sell side. And then New York lunch low was the target overall. All right, so jumping into the analysis, we're basically only going to be paying attention to what is mentioned here. So taking a look at the M15 chart, we have the New York PM opening right here. And then we have that deliverance up towards buy side, and we see Nasdaq engaging with the London high, and a cracking correlation is established. The correlated assets fail to follow suit with Nasdaq, and this would be your point of inception for that sell side delivery motion. And here we have the 1400 opening. So 1400 is the candle to come and engage with that London high. Now we are framing a 1400 power of 3. In this case, we're looking for an open, high, low, and then close. So 1400 opens, we form the high, we then form the low, and then we close. And then dropping down, taking a look at the M5 chart. M5 offered a lot of framework in order for us to execute on this. So we have that deliverance up towards buy side, engaging with that London high. We have that 1400 candle opening right here. And then we have this one candle coming down and closing below these series of up close candles. Right here, this would be your change in stay in delivery. These series of up close candles, series of down close candles. In this case, just one down close candle. And then these series of down close candles will also be your breaker block, but I'm not paying attention to this breaker block in relation to this execution. So series of up close candles, series of down close candles, change in stay in delivery, formation of your order block. And then we have this up close candle on the M5 delivering into our series of up close candles right here. And then we have closure below the bullish M5 candle that delivered into these series of up close candles. And that's what makes this a propulsion block, an M5 propulsion block, which is what we utilized for that sell side delivery motion, as well as the M15 SIBI. But we're looking to transpose these higher time frame PD arrays onto the lower time frames and ultimately refine them so that we can find a focal point for us to say, okay, this is where we should look to execute. We have that 1500 opening right here, which would be our power hour, and we end up taking notice of the fact that 1500 opens, we deliver into that M5 propulsion block, and then we continue that sell side delivery motion. Standard deviation anchored on the M5 would be from this high all the way down to this low, -2, -2.5, projecting just under our New York lunch low. -3.5 is where we end up collapsing for the day. Kraken correlation was established here. So this low, the New York AM low, was not engaged with on NASDAQ, while the other correlated assets engaged with it. And then dropping down into the M1, taking a look at price action a lot more descriptively. So we have that deliverance up towards the buy side, and then we have the Kraken correlation with the London high. Now I have a question mark here because I would generally like to be positioned here. I like to position myself at a point of reversal, not continuations. I wanted to see another Kraken correlation establish itself here. So I wanted to see this up close candle engage with this high. So no Kraken correlation was established here. But then we did have that change in stay in delivery. We engage with the rejection block, and then we have the change in stay in delivery that follows after. So up close candles, series of down close candles. We engage with this up close candle, and then we deliver towards sell side. So I'm following this delivery and seeing if, okay, is this going to be our point of inception, or are we going to later return up and engage with this high and then continue that sell side delivery motion? But of course, when we're looking at the higher time frames, we've already acknowledged the fact that we had this M5 change in stay in delivery. We've utilized it very efficiently. We've formed a propulsion block X, Y, and Z. We're seeing very efficient and algorithmic price action for that sell side delivery motion, as well as the fact that we have very clear drawn liquidities at sell side. But this would be your point of inception, and what I had taken was an inception continuation model. So we have this point of inception here, we have that deliverance all the way down towards sell side, and then we begin delivering back up and towards buy side to engage with that M5 propulsion block. And with this retracement, we're retracing back into this range right here. So from this candle's high all the way down to this candle's low, this is a respective range. And the reason why I'm anchoring the range from this candle's high to this low and not from this candle's high all the way down to this low is because this range, we already had a retracement. So this high all the way down to this low, we already retraced into an equilibrium of this range. And then we began expanding back down again. So now we're paying attention to this range. We see a retracement into this range. We engage with the equilibrium. We have a bit of distortion that occurs here. Kraken correlation presents itself, and then I have a standard deviation projecting for buy side. So just this single candle right here, anchoring a standard deviation, and we have that -2, -2.5 projecting for the OTE of this range right here. Now, the OTE wasn't actually something I was paying attention to. I was only paying attention to the M5 propulsion block, as well as the -2, -2.5 standard deviation, and taking the acknowledgement that we were above the equilibrium of this given range right here. But OTE was in direct alignment with our -2, -2.5 right here, and that is where we ended up finding our point of inception to continue that sell side delivery motion that was already established earlier on right here. Another thing I also forgot to jot down was the fact that this is all occurring within our 30-minute window. So 14:45 all the way up until 15:15, that would be our 30-minute window that we're looking for reversals to take place. And then dropping down into the 15-second time frame, so we have that Kraken correlation that established itself, standard deviation anchored onto this leg, -2, -2.5 projecting for a reaccumulation, redistribution of orders, or a smart money reversal. In this case, we're looking for a smart money reversal. We're not looking for price action to reaccumulate orders within this range to continue redistributing up towards buy side. We're looking for smart money reversal entirely for price action to completely reverse on this range that was dealt, as well as continue that sell side delivery motion. So we engage with that -2, -2.5, as well as the OTE. And what we end up seeing here is we have a Kraken correlation that presents itself above our OTE level. And we have this 15-second inversion for a value gap. This is what I executed off of. I executed off of the 15-second inversion for a value gap, as well as the fact that there was a 5-second change in stay in delivery. So when it comes to me executing my trades, I have a chart where I'm simply just paying attention to the 1-minute time frame, 15-second time frame, and the 5-second time frame all simultaneously. And this is allowing me to, see price action unravel itself from those very lower time frames onto the higher time frames. The 5-second change in stain delivery is going to offer itself first, and then it's going to follow with the 15-second change in stain, 15-second inversion, 1-minute inversion, and then 5-minute, order block X, Y, and Z. But we have that 15-second inversion for value gap, which is what I executed off of. And then I simply had my stop loss at this high because this would be a point of inception. And if we engage with this high, we're invalidating this point of inception. And then dropping down, taking a look at the 15-second, and then dropping down, taking a look at the 5-second time frame, we have the deliverance above that OTE being the red line, -2, -2.5. Cracking correlation established right here, 5-second change in stain delivery, 15-second inversion for value gap, and we have that deliverance down towards sell side. So yeah, that is quite literally it for the trade, to be quite honest. Taking a look at the M1 again, we have that 1500 opening, we engage with the M5 propulsion block. We see how the candle before our 1500 opening is very respective of our M15 SIBI. So body closing outside of it, and then the 1500 open, we engage with the M15 SIBI as well as the M5 propulsion block, and then we deliver down towards sell side. Your low risk sell, standard deviation anchored from this high all the way down to this low, and it's projecting for New York lunch low. -2, -2.5 is where we end up having our reaccumulation of orders right here to continue redistributing down towards sell side. -4, -4.5 being our point of terminus, projecting for that New York lunch low. But of course, we already know that we have a higher time frame point of inception, higher time frame in relation to the M1 and 15-second. We have this 5-minute standard deviation that we've projected down towards sell side. It's projecting under the New York lunch low. It's projecting for this low that resides right here. When we look at the 15-minute, the New York lunch low is not a respective swing low. It's this low that is a respective swing low. And yeah, that is basically it for the execution.